Caroline Hyde at Bloomberg's World Headquarters in New York.
And I'm Ed Ludlow in San Francisco. This is Bloomberg Technology.
Elon Musk feuding with the San Francisco mayor after makeshift bedrooms in the office is a city violation. But Silicon Valley giants are notorious for sleeping pods, beanbags, and other comfy setups. We discuss precedents and priorities.
And FTX warning signs. How did the company win over so many venture capitalists and investors? We discuss due diligence and the venture capital outlook with CB Insight's Brian Lee.
And Microsoft meets the FTC on its Activision deal after striking a Call of Duty agreement with Nintendo. And Microsoft doesn't own Call of Duty yet. We get to grips with gaming. But first, we check in on those markets. And once again, the moon music turns sour. We are worried about a Federal Reserve that continues to hike. We are worried about the all-important yield curve that is shine a light on here. Negative 84, the most negative, the most inverted that we've seen since 1981. And of course, really unprecedented in the last 4 decades or so. We're starting to see it down once again, falling ever more inverted, which means that is a signal potentially of a Fed mistake. So says Cathie Wood over at ARK. She's really worried about what the signal shows in terms of recession, how far the Federal Reserve is going to push us into a slowdown. S&P falls by 0.2%, NASDAQ by 0.5%. Geopolitics in the mix as well. We're worried about the statements from Putin, where he would go, of course, in his focus on looking at overall Ukraine and what that means in terms of even nuclear options. That took wind out of the sails in terms of overall focus on risk-taking. Let's flip it up a gear. I want to look at what happened in China as well, because we've had much of the optimism there in terms of a COVID U-turn and a reopening of that economy. It too is down. The Golden Dragon, the China index, off by 2.8% there as well, Ed.
Yeah, it's interesting. Some of the easing of COVID restrictions in China not having the same boost for individual US-listed Chinese technology shares as it has done. Apple is a key name we're watching, down 1.4%. A report from Bloomberg that one of its key suppliers basically is looking at the availability of lower-end iPhone 14 Pro handsets and saying the demand's not really there, so they expect actually a little change to the outlook for Apple going forward. Carvana, this is one of your don't adjust your TV set moments, Caroline. It is down 43%, the most on record. A lot of concerns about its debt and agreements between its creditors, which we'll dig into in the program. And we know right now, actually, and we're waiting for more news, that Microsoft is meeting with the FTC over this deal with Activision, the stock kind of treading water in anticipation of what comes out of that and the next steps with this deal. Tesla's a really interesting name right now, down for a third straight day. Longest run of declines in 2 weeks, lowest level in 2 weeks. 2 key pieces of news out of Asia. Yeah. 1, Tesla cutting prices still in China to incentivize the consumer. 2, started deliveries in Thailand, a new market, not doing much to support the stock.
Tesla, and I also think that, Ed, it's potentially the worry about a distraction, right? Many a retail investor focused on Tesla is worried what Elon Musk is up to. And we want to dig into exactly that right now, because who else but Elon Musk is currently sparring with the city of San Francisco after Twitter turned some space at the company's headquarters into makeshift bedrooms, which it turns out is a possible violation of the city's building codes. Bloomberg's Sarah Fryer is here with more. We know that he likes to tussle. We know that he likes to tussle on Twitter. But in particular, does he have a leg to stand on here? How much of a focus is this for the city?
Well, you know, as the city has said, they need to look into any complaints that come forth. And there has been a complaint about the Twitter offices, the fact that they're putting beds and armchairs into various conference rooms, which I guess they have room for because a lot of employees have been cut or laid off. But it is sort of unusual to expect employees to sleep at the office in an actual furnished bedroom.
I mean,
despite the culture you were speaking about with sleeping bags and nap pods.
Yeah, I mean, talk to us, though, more generally about the balance, the lack thereof, for tech workers at the moment in San Francisco. Are people having to sleep on the floor? Is this something that happens at large, or is this very focused on really an Elon Musk cult here?
Well, you see this all the time at startups, right? And even in early high-growth companies. I remember talking to employees at Snapchat a few years ago about how they'd turned some bedrooms, maybe did a code violation in the opposite direction, turning some residential housing and bedrooms in Venice, California, into offices. So I think that it's not unheard of. What I think we're seeing here is the pendulum swing from being really in the favor of workers, giving workers flexibility, letting them work from anywhere, letting them work from home, to this period where we're seeing this big spate of tech layoffs and people concerned for their jobs and the future of their employment, and willing to do sort of whatever it takes to prove to their employer that they are hard workers. So the power is really shifting back to the employer right now in this economic stress time.
We reported in this piece that Musk is making these sleeping arrangements available not just for existing Twitter staff, but some of the other workers from his other companies that he's brought in to do that. And we've reported in recent weeks that at first it was, you've got to come back to the office for 40 hours. Then it was, some of you will be working 80 hours. What's going on inside Market Street office of Twitter right now?
Everyone's got to be on the 10th floor, Ed. You've got to show up. If you're a programmer or a designer, you better be there creating this environment of collaboration, of brainstorming. I think Musk really wants to feel momentum from employees. Meanwhile, these are the employees that were recruited based on this promise of work from anywhere forever. Twitter was really a pioneer even before COVID in this idea that employees could really be productive from anywhere they could log into the internet. And Jack Dorsey himself loved to occasionally work remotely. It's just a completely flipped culture. And I think one thing we need to be maybe a little concerned about here, or at least on the watch for, is does Twitter actually end up staying in San Francisco? Because we've seen the future of Musk's spats with governments in the past.
Right. The most prominent example being moving Tesla's headquarters from Palo Alto to Austin, Texas. I want to think about what Elon Musk actually said in his tweet. He essentially accuses San Francisco's mayor, London Breed, of being too focused on this issue, not enough on the fentanyl crisis, as an example, and that's what he referenced. We had the San Francisco district attorney in our office for about an hour last week, getting a sense of the priorities in this city. Where does San Francisco revival, if you want to call it that, sit right now?
Well, I think that there's a lot of hope for a different set of circumstances under the new district attorney, but it's not all on her. There is a lot of bringing energy back into the city that needs to occur, and the layoffs at Twitter probably haven't completely helped that, right? I mean, as he's trying to get people to come back into the office, there are also probably a lot of San Francisco-based workers who no longer have jobs at Twitter, alongside a lot of other layoffs that we've seen at San Francisco-based companies such as Salesforce. So I do think it's going to be a long road, but I think Twitter, of all companies, is right in the middle of one of the more crime-ridden parts of the city and could be feeling any changes more dramatically.
Bloomberg's Sarah Fry, thank you very much. Let's get to an update on the trial of Theranos' former president, Ramesh Sunny Balwani, which is still underway. Bloomberg's Peter Blumberg, who is one of our legal editors following this case, and joins us with the latest. We've been waiting for this since July. What is it that we're waiting for?
We're waiting on the judge to impose a sentence. Balwani was convicted of fraud, and the judge has to decide whether he'll get a prison term, and if so, how long.
And given it was more than 11 years for one Elizabeth Holmes, many are expecting what here, Peter?
Well, somewhere around the same amount of time. It could be somewhat less or it could be somewhat more, but the prosecutors have made the case that they are equally culpable for defrauding investors, and that Balwani, in addition, was convicted of defrauding patients.
Caroline and I both remember the moment that the sentencing was passed for Elizabeth Holmes herself, just little more than 11 years, at the lower end of the range that prosecutors and the judge had kind of discussed. That was severe to many, but there are others that are saying, actually, in Balwani's case, it could be even more severe.
Well, it could because, as I mentioned, he was convicted of additional counts that she was acquitted of. And also, we're waiting on the judge to indicate whether he may think that Balwani was somehow more responsible because he's older and more experienced. He had run a software company in Silicon Valley prior to taking this job, whereas she was 19 years old when she dropped out of Stanford. And so she was the younger, less experienced of the two. And then the other wild card, of course, is that during her trial, she accused him of abusing her during their romantic relationship, sexual and psychological abuse, which he, of course, wasn't a witness in that case and didn't get to speak to it, and it didn't come up in his own trial. So if the judge has any conclusions in his own mind about whether Balwani somehow manipulated Holmes or treated her badly, that could also factor into the sentence. Of
course, this being a key one that many are looking at in terms of precedent setting as well. Peter Bloomberg is going to be there with all the latest. We thank you so much. We await those headlines. Meanwhile, coming up, so much more to discuss in terms of the future of VC investments, in fact. And we know they're on track for a sharp drop, perhaps the sharpest in more than 2 decades this year. But what is the effect of FTX in particular? This is Bloomberg. Let's talk about venture capital investments. Not too hot right now. In fact, they're about to see their steepest drop in more than 2 decades, even surpassing the decline in the dot-com crash and, of course, of the financial crisis. Ed Ludlow, bring us up to speed. What are the details?
Yeah, it's interesting. A data set published by Prekin on Wednesday, $286 billion deployed by venture capitalists globally in the first 11 months of 2022. But on a year-on-year basis, that's a drop of more than 40%. Which is a big change, right? You think about sort of the energy in these markets in 2021. You have to go back, as you said, well close to 2000, years following in the dot-com bubble, also following the 2008 financial crisis. And this is the biggest drop since then. You know, it's an interesting environment, higher rates, putting a premium on capital, down rounds and markdowns in terms of valuations, and sort of skittishness, nervousness in the global economy. What was really interesting for me with 2 other data points, Caro, China and the US. In China, the value of deals down 50%, and in the US down 45%. Those are our 2 kind of leading VC markets as well. So it's a confluence of factors, but we're coming from a high base in 2021, and it's not been a great year.
And 2021 was extraordinary. We've got to remember, and the comparison is being made by none other than Brian Lee. We're really pleased to welcome him now. He's got great data, great statistics, and great context for us. He's, of course, the Senior Vice President of CB Insights Intelligence Unit. You do phenomenal work just crunching the data and understanding the mood change here. Just talk to us, Brian, about where we're coming down from in terms of 2021 and overall whether this 2022 demise sort of folds into 2023.
Yeah, certainly. I think when we talk about 2021, against almost any measure, it was a record year, not only in terms of the amount of funding going to private companies, but the number of deals that were actually done. So we were moving at a pace of almost 100 companies being funded every day.
And 100 a day.
And 100 a day. So what we saw was, as a byproduct, was enormous inflated valuations that we were seeing from companies not only in the crypto space or in other kind of interesting areas, but telehealth, sustainability tech, et cetera. In a lot of ways, it felt like there was too much money chasing, despite the fact that it was so many deals, too few deals.
Yeah. And therein lies some of the issues that now, of course, the main focus is one of FTX. All of these concerns sort of become emblematic in their demise. The fact that we've seen basically a lack of due diligence, money just flying after particular investments, particular companies that blew up the valuations, just extraordinary propensity. But also what's so interesting about the FTX situation and perhaps the cooling effect its own fall from grace is having on the rest of the VC market is that it too spawned other startups. It too made investments. Just talk to us about the work you've done and how sprawling FTX's own funding and funding in other companies was.
Yeah, so we're learning more every day about the web of investments from not only Sam Bankman-Fried himself, but FTX Ventures, Alameda Research Ventures, and their related entities. I think what we know is that collectively they've made hundreds of investments in private companies across a wide variety of markets, including crypto exchanges, DeFi, NFTs, and blockchain infrastructure, just to name a few. What we found in our research is that when we looked across the portfolio of companies, about 3/4 of those investments were in early stage companies. I think what makes this a little bit thorny is that each of these investments will now have to be properly valued and disposed of as we move through the bankruptcy process. And this presents a lot of challenges for companies that took money from FTX's venture arms for a couple reasons. So number one, obviously, thinking about the reputational hit that FTX has had on the crypto industry, but also the broader valuation declines that we've seen across the past year, it's entirely likely that we'll see equity stakes being sold at a substantial discount, probably as much as 50% or more. So these types of events and this event in bankruptcy will trigger a revision of each company's valuation, creating potential issues for them as they attempt to raise additional capital. And so it's going to be a very difficult process for some of these companies as they think about how do we move forward, how do we raise additional capital at the valuation that we now have. I'd also mention just very quickly that we are also assuming that a lot of these equity stakes are cash. What we've seen from some of the data that recently came out is that some companies were funded with tokens. And so obviously that would decrease the value of the equity stake tremendously as the tokens themselves are drastically marked down.
Brian, there's also the other side of the equation. I think we can bring up some of the names that invested in FTX and Sam Bankman-Fried, and many of those high-profile names had to mark down the value of their stakes to zero, from various bars. The question I have for you is about due diligence. How can some of these reputable firms have made these decisions and come up with this result?
Yeah, I mean, while I can't weigh obviously on the specifics of a particular VC's due diligence process, I think it's safe to say that at least a basic level of due diligence was done here, which would have included things like financials, but also information related to governance protocols. So that said, I think there's two things that I'd say here. First, if there was fraud, which we believe that there is, if fraud was indeed perpetrated, it's entirely possible that there were a number of misrepresentations by Sam Bankman-Fried and other executives during due diligence that muddied the evaluation process. Second, while every investor in these companies presumably did do their own due diligence, the demand for deals and this sense of FOMO that we got in 2021, especially in the crypto space, definitely affected not only deal terms and valuations, but also likely increase the risk appetite for many investors. So,
Brian, I just point out very quickly, Brian, if I may, that of course no charges have been brought against Sam Bankman-Fried yet for fraud. I want to ask you really quickly before we run out of time, what does this do with valuations and interest from private markets in this space going forward?
Yeah, so we clearly think that valuations already have been on a downward slope. So from Q1 2022 on, we've been seeing some pretty remarkable declines in terms of funding. We think that FTX is only going to compound some of the skittishness that I think that we're seeing from VCs, especially in this area. That being said, a lot of these companies, as I mentioned earlier, are early stage companies. And so as a result, their valuations might not be hit as hard. As well, you'll see sort of differences in some of those spaces. So crypto exchanges, of course, but in blockchain infrastructure and those sorts of areas, you probably won't see as big of a hit directly attributable to FTX.
Brian Lee, Senior Vice President of CB Insights Intelligence Unit. Thank you. Now, layoffs are accelerating across tech companies. Adobe has just scrapped about 100 jobs concentrated in sales. Some of the employees who lost their jobs were given the opportunity to find positions elsewhere in the company. That's according to sources. Also, Plaid saying it dismissed 260 staffers, around 20% of its employees, citing changing macroeconomic conditions and the company needing to rein in costs. The tech industry has been slashing jobs at a pace nearing the early days of the COVID-19 pandemic. In November, the sector announced more than 50,000 cuts for a total of 80,000 or so this year. Now, coming up, the top analyst calls of the day, including that dismal price target for Carvana. The stock down 46% Wednesday's close, biggest drop on record. More on that next. This is Bloomberg. Time now for our top tech calls, starting with, of course, Carvana shares sinking after Wedbush analyst Seth Basham cut the online car-used retailer to underperform from neutral. This follows a Bloomberg report that Carvana's largest creditors, including Apollo Global and Pacific Investment Managers, signed a pact binding them to act together in negotiations with the company. The move is meant to prevent the creditor fighting each other in debt restructuring negotiations, which Basham views negatively, saying investors see a high probability of default. And sticking with cars, Tesla may need to make additional price cuts in China in the coming year to stimulate demand, which could put more pressure on automotive gross margins. That's according to Bernstein. Tesla shares were down Wednesday as it offers further incentives to Chinese customers in an effort to boost sales. And finally, online travel stocks fell Wednesday, the space to be avoided by investors heading into 2023, according to Wolfe Research. In a note to clients on Wednesday, the firm cut its view to from overall underweight from market weight, this following an expected downturn in demand. Caro.
Oh, poor old airlines. Are you getting on a flight anytime soon, Ed?
I might be getting a flight across the Atlantic soon.
Yeah.
But I got that stronger dollar. I got that stronger dollar on my side, which is rare in my lifetime, as you know.
Yes, exactly. And now it is rather nice when you go back to the UK. But all in all, it is just this constant pressure on some of these. These were the beaten up companies during the pandemic,
right.
Then came back and now back under pressure. But really, it does feel some of the economic headwinds are so pressing at the moment, particularly when it comes to valuations in technology.
Yeah, they had a bright spot coming out of the pandemic. Everyone was eager to travel, but then the economic reality hit. And you can look for a deal online, but it's not always there.
So key to keeping up to speed when some of these analyst ratings on these companies and indeed some of the share price falls that we see. Meanwhile, coming up, the latest on Microsoft's acquisition of Activision. The gaming world is getting more toxic as well. We'll talk about it. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York, and I'm alongside Ed Ludlow out in San Francisco. And we have got to talk gaming now because Microsoft executives, well, they're actually meeting with FTC Chair Lina Khan to discuss the details of that Activision Blizzard merger. Well, call it $69 billion deal. And Microsoft, Nintendo, meanwhile, agreeing to a 10-year deal to bring Call of Duty to the Nintendo universe. All of that is trying to assuage any concerns around that $69 billion deal. And of course, the agreement itself depends on if Microsoft is actually able to close that $69 billion acquisition. Here to discuss all of it, Bloomberg's Leah Nyland. And Leah, just talk to us. Lina Khan in a room, Microsoft executives. How much convincing do they need to do to get this through?
Yeah, well, Lina Khan has been a pretty aggressive antitrust enforcer since she was named to the post last summer. The FTC under her already brought a suit against Meta Platforms over a pretty small virtual reality deal, but one that the FTC was concerned would give Meta a real leg up in virtual reality and allow the social network to sort of dominate that. So they have a lot of concerns about the big tech giants sort of using acquisitions to get a leg up or become dominant in sort of emerging markets. And Microsoft, one of the big reasons it said it needs this deal is because it thinks the future is cloud gaming. And cross-platform gaming, i.e., you don't necessarily need to buy these fancy consoles from Microsoft or PlayStation or Nintendo. You might be able to, access all of the same games either on your computer or your phone and mobile device. So I think there's going to be a lot of concern from the FTC about whether this gives Microsoft too much power.
I think I'm right in saying that in recent days, Lina Khan commented that there's a misconception the FTC is anti-deal. It was also interesting last night, Leah, to look at the Bloomberg terminal and look at our reporting this meeting's happening, and then the headline about a 10-year deal with Nintendo for a product they don't yet own, Call of Duty. Are these the kind of things that Lina Khan wants to see Microsoft doing if they're to have a chance for this deal to go through?
Yeah, Microsoft has actually outlined a bunch of things that they're doing to try and placate the FTC. They entered a union neutrality agreement with the CWA over potential concerns related to labor. They also announced that they were no longer going to require employees to sign non-compete or non-disclosure agreements related to any sexual harassment or sexual assault allegations. Again, trying to assuage some of the FTC's stated concerns about non-competes. So I'm not surprised at all, actually, that they announced that right before they were going to come here to Washington to sort of meet with her. The important thing about the Nintendo agreement they signed or announced yesterday is it only applies to the console. If Nintendo was going to offer one of these subscription services, they wouldn't necessarily get access to these games.
Well said. And also, I want to sort of shine a light on who they haven't struck a deal with, Leah, and that being Sony. And there was a great quote coming from Phil Spencer, of course, man who manages the Xbox part of the business. And he's really saying that there's been one game industry participant that's really been raising all the objections, and that is Sony. And he thinks actually, basically, they're spending all their time talking to regulators and not trying to get a deal done. Truth in that?
There is certainly some truth in that. I mean, Brazil is the only regulatory agency that has so far given a verdict on the deal. Sony was the major complainant there. The UK CMA has a very public process, so a lot of the filings that go through that are made public, and Sony has been, again, the main complainant there. They're very concerned about what having Activision's library of games will make Microsoft the much more appealing gaming platform than PlayStation.
Leah Nyland, we want to thank you so much. We also want to thank Phil Spencer there because we're going to update his photo. It's a little bit of an old school one. We thank you. Meanwhile, look, we want to stick with the world of gaming. We want to shift gears a bit because we've talked a lot about, for example, content moderation and freedom of speech on social platforms. Now, a new report by the Anti-Defamation League suggests we look at it from a gaming perspective as well. Now, according to this report, white supremacist ideas gained significant exposure through online video games this year. 1 in 5 adults, I'll say it again, 1 in 5 reported being confronted by white supremacist ideologies. Now, that's more than double the rate of a year earlier. Joining us to discuss, Anti-Defamation League's Director of Strategy and Operations, Daniel Kelly. The data is significant. It's concerning because it's also being targeted at children as well. 15%, I think it was, of teens, pre-teens. Talk to us at the moment, the response from the companies, the kind of games we're seeing this being involved in, and how they're tackling it.
Sure. So right now, the only game company that has an explicit policy against white supremacist extremism is Roblox. Other than that, you really don't have any major game company that is that has actually an explicitly stated policy saying that extremism is prohibited on their service. And the result of this is what we see in the games that make up the sort of top tier of where players are experiencing white supremacist ideologies at this point. Call of Duty is at the top with 44% of adults being exposed to white supremacist ideologies there, followed by Grand Theft Auto, Valorant, World of Warcraft, and Fortnite.
Now, it's interesting, of course, companies, in response to the story being written up, have been responding. And Roblox, as you say, has a policy overall, and they've been coming back sort of talking at length about some of their views. We know that overall, the spokesperson from Riot Games, for example, has been saying they're creating a safe and inclusive environment for all players. It's core to their mission. Notably, Take-Two didn't immediately respond to a request to comment, but Call of Duty's code of conduct, they say it prohibits harassment, discrimination, and our games are designed for joy and connection. Daniel, when they want it to be for joy and connection, what can they do actively now to try and suppress such hate speech, such words that are so hateful to so many?
I think there's a difference between having a policy against hate speech and discrimination and having a policy against white supremacist extremism and extremism generally. What these responses really show is how early in the process a lot of game companies are in building out policies around these issues. They're sort of combining a bunch of different phenomena in online spaces into one policy, when in fact, when you look at social media, for example, they've spent a good amount of time differentiating between what is extremism, what is terrorism, what is hate speech, what is harassment, and how do these things manifest in their platform. I think the game companies need to do a lot more time building policies and operationalizing those policies such that they're able to actually action against extremist content as well as find it on their platforms.
Can I just push you on that point, Daniel, and particularly questions around technology? Are there any technological solutions that ADL is proposing, what are essentially top-tier names, right, in the gaming industry, invest in, look at to improve this situation?
Sure. So I think one area where companies can stand to invest more is around voice chat moderation. Right now, a lot of tools that are available for content moderation are really focused on text chat, and the technology to detect and action content in voice chat is really nascent in comparison to that. So I would recommend that companies invest in developing the technology to really be able to do voice chat moderation at scale.
Do some of these groups in your research and in your experience target gaming and in particular online gaming platforms because they think it's an area of vulnerability, or in other words, for them, an area of opportunity?
Absolutely. I think the fact that that the moderation is so lax gives an opportunity to people who want to abuse it, either extremists who want to use it for their own ends, or even young people who want to use it to explore some of these hateful ideologies. If you look at for example, the report that the New Zealand government put out in 2019 about the radicalization of the Christchurch shooter, he started his journey in online games, testing the waters of some of these ideas by experimenting with using various hateful ideologies. He was formally radicalized in traditional social media, but he began his journey in online games, and so it becomes a sort of proving ground for people who are interested and want to express these ideas, and it's up to the companies and the communities to push back against them.
I'm sure data that they will be digesting at the moment coming from your Anti-Defamation League. We thank you so much, Director of Strategy and Operations, Daniel Kelly. Now, we just want to bring you some breaking news because Ramesh Sunny Balwani, of course, who was COO over at Theranos, has now been sentenced 13 years in a fraud case. He was the former president, convicted of conspiring with Elizabeth Holmes, who, of course, got more than 11 years. So the COO, Balwani, is getting 155 months all told. So that's 20 months more than Elizabeth Holmes. Now, overall, the judge will decide later on how much restitution Balwani must pay as well. Remember, he was, of course, convicted earlier this year on 12 counts of wire fraud, conspiracy to commit wire fraud as well. So we focus in on, of course, the long-running saga when it comes to this blood testing startup and as it draws to a close. Ed.
Yeah, that's right. There was an expectation he might get a more severe sentence. Let's get some other stories that we're keeping across. Robinhood says activity on the platform is steady, but still much lower than 2021 levels. Robinhood reported monthly active users for November of 12.5 million, about 33% fewer than the 18 million users it reported in 2021. Crypto trading volume is down 62% year over year, and equities trading volume down 54%. Shares of Robinhood are down 47% year to date. And things aren't looking better for Coinbase. Coming up, FTX's impact on retail investor trends and also institutional adoption of crypto. But first, let's take a look at NFT sales. They're down to a 16th-month low following that FTX blow-up. This is Bloomberg.
We continue to gauge the fallout from FTX. We just had a great conversation with CB Insights about some of the impact it's had, their own funding issues, and then the funding issues for other companies. Let's keep talking about the contagion, the chill of this crypto winter with Sonali Basak, who's going to walk us through, well, look, some of the future issues, some of the firms that are currently facing concerns right now.
Yeah, we have to look outside of FTX because there are other firms that, due to FTX or other reasons, are facing issues. And I want to start with Genesis here, because the lending business there that had faced withdrawals, the interim CEO came out with a letter to investors giving a general sense of timeline, which is very helpful to understand. As we know, they've hired a restructuring advisor. You have part of the letter here saying that they anticipate that will take additional weeks rather than days to sort this out. Okay. So in some ways, that creates some sense of calm because you have a timeline here. But again, that means weeks of anxiety rather than days of one to figure out what the timeline will be here and whether they will ultimately have to seek a more severe, coming together of this issue. So that's Genesis itself. That's on the lending side of things. I want to move over to exchanges because in the exchange world, there's a lot of interesting things happening. You've been talking on the show a lot about Coinbase. Very simple story there. They're saying that revenue will fall 50% this year. Not sure what it'll look like necessarily next year, but remember, so much of this is about what's happening in the broader crypto industry. And I do want to talk about what this means about how other exchanges, Caroline, are reacting in terms of competitive pressures. Because you have Binance US cutting fees. And remember, over at Bloomberg Intelligence, Eric Balchunas has been really great on this. It was bound to happen. Yeah. It was bound to happen, this fee war that you're seeing in exchanges in the crypto industry, similar to what you saw in traditional finance. So what does that look like? Discounts when BNB tokens are used for fees, volume-based discounts. So if you go over a certain threshold in trading, and again, this is something that they're proud of. They're pioneering zero-free trading, but these types of moves are going to continuously impact revenue as we see that fee pressure on the industry. Lastly, on exchanges, I wanted to talk about SushiSwap.
Okay.
Why? Because we're talking about centralized exchanges and cryptocurrencies. We got to talk about DeFi.
Yeah.
Exactly. So what is happening over at SushiSwap? You have the chief explaining that there's a liquidity issue that could be created here. The token had plunged. The treasury has 1.5 years, so about 18 months of runway left. Many projects, because of the crypto winter more broadly, are facing similar obstacles. They have said in this letter here that they don't need to necessarily go by the way of all these other firms that are facing more severe issues, but to be able to stave off some issues here, they do need to make some changes in terms of how they think about the tokenomics behind SushiSwap.
All right, good friend, Sonali Basak, thank you. How are you across so many things? I'm in awe. Zooming out to the FTX impact on institutional adoption. Let's discuss with Stéphane Ouiet, CEO of Front Financial, which advises traditional firms on ways to participate in the crypto space. I would point out its valuation has fluctuated a little from $80 million to around $11 million during this downturn. I mean, clearly there's an impact whether you're a retail investor, there's an impact if you are an institutional investor considering dipping your toe. What is the mood music from the clients that you serve?
Yeah, thanks very much for having me on again, guys. It's definitely had a major impact on sentiment. I mean, there's definitely there's many institutional investors who have begun plans to enter the digital asset space. And, even as recently as the Celsius Luna disasters and just the general market downturn as a whole has caused them to step back from those, maybe reconsider them altogether. But I will say that, our firm has been around for over 4 years now. So we were born in the 2018 downdraft, and there is considerably more institutions sticking around this time than there was previously. I mean, in 2018, it was really aggressive, the degree to which institutions tried to dissociate from the space. Notably, the CBOE killing their Bitcoin future was quite extreme. And you are seeing many institutions stick with crypto this time around and see it as an opportunity, in spite of the sentiment being understandably low.
Stéphane, just to be clear, have you any exposure to FTX or any other of Sam Bankman-Fried's companies or any financial relationship to him?
No, we don't. We have to stick to our language in their press release, as we are a public company, but we have no direct, and that means no accounts with FTX or any other relationships like that, and immaterial financial exposure altogether. However, as you point out, we are a firm that's operating in this industry, and there is indirect impacts, as you suggested, such as those to sentiment.
Stefan, talk to us about, can you give us a sense of how many institutions are coming to you? How many clients do you have? How many people are wanting to be in this space?
Yeah, so we have a bit of we have a broad kind of institutional client. There are institutions, there's now an institutional client in crypto, which is really here to stay. And I define those as, the Bitcoin mining firms, large blockchain development companies, payment processors that are now accepting cryptocurrency that want to deal in large size, via block. And then there's the active manager, which has kind of been, a very kind of slow, has had a very slow adoption cycle. I think in a lot of ways, the active manager has kind of had trouble seeing where they fit into this space. The space is so volatile that it's not palatable for people to own, for firms that are trying to focus on strong risk-adjusted returns and targeting 10 to 20% annualized returns to hold assets this volatile passively. But what we did start to see at the end of the year was started to see institutions that are viewing the arbitrage dynamics in cryptocurrency. For example, I mean, there are often times where crypto traders are willing to borrow US dollars at far higher rates than you see in borrowing markets in traditional finance, just due to the lack of dollars in the ecosystem altogether. And these dynamics that really present arbitrage, alpha generation opportunities that are quite unique to a nascent space like crypto, people are starting to understand. So those clients are coming in the tens, definitely not in the hundreds, but it is happening for sure.
You, of course, publicly traded company, as we said, and of course, like much of the space, have seen a particular fall in your share price and market capitalization. When it comes to transparency, when you're putting out, are you putting out how many customers you have? Are you putting out what revenue statements look like? Are we expecting fewer people to be entering the space and coming to be served by a company like yours?
So, I mean, specifically with FRNT, it's a little bit of an awkward question. I mean, we went public at the end of April, right as the market started to accelerate its sell-off, both in cryptocurrency and traditional finance. So, we've been in a position where we haven't really had to guide the market all that much in terms of our expectations. And we're finding ways to do that as we understand the environment that we're coming into. For firms like ours, it's a bit of an interesting opportunity landscape because, we are getting, as of right now, we're getting out of this relatively unscathed relative to a lot of competitors that are going out of business. So we've actually seen a large influx of clients that are looking to do trades with FRNT now that they were maybe doing with somebody else.
What numbers are we talking?
Yeah, again, in the tens. That's in the tens of clients kind of coming to us in the weeks, months. 10s, 20s, 30s. That's material for us. I mean, this is I think a lot of time that the institutional wave of crypto has been a little exaggerated in terms of what's actually been happening. People have been taking a very broad use of the term institution, but yeah, we're very pleased with the progress that we're seeing even in an ugly market like this.
Thanks for being that transparent. We thank you for it, Stefan Wheeler, FRNT, Front Financial CEO. Meanwhile, coming up, so much more to talk about. In fact, let's talk about scammers, how they're taking advantage of Amazon's #1 bestseller badge. This is Bloomberg.
Amazon shoppers are getting scammed by bestseller badges, and we're going to break down how this works. So merchants will take popular items like a phone mount for your car and put it in a category with much slower sales. Those phone mounts are going to rocket to the bestseller rank because a lot more people buy them than buy windshield wiper fluid hoses. When's the last time you bought some of those? If you search Amazon for phone mount for a car, you're going to see a lot of products. And a lot of those products are going to have bestseller badges. It's kind of a stamp of approval. But only if you take a minute and look more closely, you're going to see that a lot of those phone mounts are in completely unrelated categories. We're talking things like replacement axle shafts. It's tough to say how widespread this scam is, but Bloomberg found more than 25 examples of bestsellers in the wrong categories based on a search for phone mounts alone. This is also a time of year when trickery really peaks on Amazon because shoppers are spending so much. US shoppers are going to spend about $120 billion online in November and December. Amazon's policies prohibit sellers from putting products in the wrong categories, but this example alone shows how enforcement is really hit or miss.
I must have been had on a phone case, Ed.
Windscreen fluid pipes? What?
I mean, it's entrepreneurial, to say the least, to some of them. Playing the system, people always try and do it, but it's a great piece by Spencer Soper. You've got to go online and indeed on the Bloomberg terminal to go read more of it. But that does it for this edition of Bloomberg Technology. Do not forget to check out our podcast. We're everywhere. From New York, from San Francisco, this is Bloomberg.